Hey, what's going on? This is TerrenceRe, and I have another stock market update for you. The title of this one is Go QQQ Go, and we'll go over the triple Qs, and we'll talk about some other ETFs and things that went on in the market this week. I'll give you a quick rundown of what happened, basically how we ended up the week. The S&P 500, the futures ended up 73 handles. That's a pretty good move. That's a real big move, 1.8%. The Nasdaq futures ended up 2%. I was gonna say they led the way up, but the Russell futures were up 2.4%, and the Dow futures ended up 1.62%. So the major indexes were up today. Had a big up move today after three big down days before to start the week. But for the most part, we're roughly right around where we ended up, where we began the week. So if you're looking at it right now, this is the SPX, the S&P 500. You'll see where we ended at 4136. This is today. So you go back Thursday, Wednesday, Tuesday, Monday. We opened at right around, what is that, 4168, somewhere right around in there. And matter of fact, I could be right exact. We look at it, opened at 4166.79. And so we ended the week at 4136.25. So a little bit below, but right there within that range. And if you look right here, these two lines that I have, now this long blue line going across, or this rectangle, that's a gap. And if you look, this is a gap that needs to be filled um, back from, or I would say it needs to be filled, in my opinion. Which is why I highlighted it, and it will offer, or it did. That's why we got this little gravestone doji right here, or hanging man, whatever they call this right here, with this wick right up here into resistance. And this is back from August 19th of 2022, where it gapped down on a Monday on the 22nd. And you can see it pull back and tested that area. And then we got our down move. So now we're right back up in that area. And then I plotted out the expected move over here. And you can see with the expected move, it came down for the week and hit the low end of the expected move for the week and then bounced up. And so that's why I plot those out to kind of, give you a guideline for what we have for the week. Now, I have not plotted out next week, so I'll probably do that later on, or sometime this weekend. And I'll do a video and post it for you guys to see. But just to tell you, looking at and I get that from the option chain. So I'm going to go 7 days out from today. We got 61.29, which is not a lot for the week. So I expect more range trading. Range trading. Say that 3 times in a row fast. I expect that more range trading next week. I don't expect. See, we got that big move today because we had hit the bottom end of that range, and then the algos, or day traders came right in and bought it up. And so we got that. It was a big move, but all it was a retracement of the down move. So we really had, if you would have looked at, you'd have been watching the news today, you would have think we had a breakout or a bull market. Now, this is the S&P 500. Now, if we take a look at, I'm going to pull up the QQQ. You can see that it actually took out its high from Monday now, or right there at it, the high for Monday for the QQQ, which is the ETF of the NASDAQ 100. It was 323.63, and we got all the way up to 323.76. So it actually broke that high, and it's moving up. So, and this is a way, the QQQ is a way to play the tech sector. So, like, if you don't want to, I'll pull up, let's see if we can find, well, pull up the NASDAQ 100, and you can see that you can see what we have in it. And if you look, you got um, Intuit, you got Lululemon, um, which Lululemon had some news that they have a weight loss pill, which if that's your thing and that's what you want to try, I don't know if I would feel safe myself taking a pill that would make me lose weight. It just seemed like anything what that you get fast doesn't necessarily seem like it would be good for you. Just my experience with life, right? So I would rather, if you can, do it the old fashioned way. I ain't gonna but you see this gap right here, and that's off of that news for the most part. Um, and you just got, and it's just skyrocketing. Lululemon has been beasting for a minute. If we look at a 3-year chart, um, let's go 5 years. So we got a 5-year weekly, and you can see Lululemon just took out this high right here. So it's on and up. I can't, I'm not gonna tell people what to buy and what not to buy, but this look like if it's moving up, and if you look to the right and it's moving up and to the right, and that's what this stock is doing. Hey, these are the type of that you like a chart that looks like this. If you're, you want to buy and hold, and I don't know if it pays a dividend though. Let's take a look at. No, it doesn't pay a dividend, so it's a growth stock for the most part, but it is growing. I mean, looking at the chart anyway, without looking at any fundamentals. Let's take a look at what else do we have in this NASDAQ 100. We got Netflix. We got, let's see, let's go back to the daily 1 year. Netflix is moving a little sideways right now. Let's see. We got Microsoft. Look at Microsoft. Uh, Up and to the right. Look at that. That's a beautiful chart. And if you're looking at it right now, it's not overbought on the RSI or on the stochastic. So I mean, this is one of those ones where it still got room to run. It's crazy. It's filled in the gap, and you still got room to run. So this is one of those ones right here where just kind of like Lululemon, but the difference between Lululemon and Microsoft does pay a dividend, 68-cent dividend. So basically, you get paid to hold it for the most part. It's tying up. It's an expensive stock, so but it's tying up. So if it's tying up funds, you're getting paid, a little bit for the investment because it does pay a dividend. Let's take a look. You got Nvidia in the QQQ. You see why it's going up? You got Nvidia up. Nvidia is not overbought, so Nvidia still has room to run. Now, when I say it has room to run, I'm just saying it's not overbought on the RSI. It's not overbought on the stock. And I have me want to, sell calls or buy put spreads or anything like that. I don't see that. I don't see. Let's look at the MACD. MACD look like it. You can see right here today, like it crossed over today. So this is another one. Um, that's doing it. Looks good. Now you see why. Let's look at now. If you look over here, you see all of these stocks are green. You got like maybe I see 1, 2, 3, 4, 5. Look like 6, maybe 6 stocks out of the 100 that were red. You got some good stocks in Google. Google is in a little range right here. You see, look like it may be getting ready to break out. You got holding on that moving average right here. If I was to draw a trend line right there, Look like it's getting ready to try to break out. You got a gap right here. So let's see what it does right here. It has room to run. Amazon. Amazon big green candle today. Is it going to come up here and take these highs out? So that's what AMD. Now AMD had been down a little bit, but the last 2 days, look at it. So you got AMD. So this is PayPal. So you have stocks in here that are PayPal is in a range. Now, to me, now this is a decent. See how it's been beat down, like been beat down and just been going sideways. So you got it in a range. This stock really has room to run. Now, instead of trying to pick an individual stock, though, you could just pick the QQQ. Go back to my watch list. You could just pick the QQQ and get exposure to all of those stocks without trying to pick, trying to worry about which one is the right one, right? And the QQQ does pay. It pays a 47-cent dividend. So, and you don't have to worry about being beholden to one stock and that one stock risk, right? And this is a way of basically diversifying by getting a little bit of all the tech stocks. And I do think that it has, you can see, I already have my next target level for here is right around 329. At this next level of my Fibonacci extension, I do have a broken wing butterfly that I bought to put on here. Not telling anybody else to put this trade on. I'm just saying that I am talking my book a little bit. So I am long the QQQ. Now I do own the diamonds and my 401k. So you would say, well, what's the difference? The diamonds is not as in my opinion, is not as a good trading vehicle as the QQQ because it's not as liquid as far as like options and things of that nature. But the diamond pays a dividend every month, an 18-cent dividend every month. So I own this as a way of, for the most part, you see how they all went up today. Now I'm looking at the futures up here of them. They all went up. So for the most part, it's just that the Nasdaq may move up more, but I'm okay with just owning the diamonds. And so that's why I own them instead of the QQQ. But I'll trade the QQQ with certain option strategies. I did want to go a little bit into the we had a FOMC interest rate hike this week. And just to let I just want to let people know that for the most part, this stuff is already baked into the market. So by the time that like you will hear all the way leading up, like what's the Fed gonna do? What's the Fed gonna do? For the most part, the market has already baked in what's gonna happen. What's gonna happen with the Fed rate decision. And I'm going to prove it to you. Keep looking at the screen. I'm going to pull up the Fed Watch tool. This is the Fed Watch tool, and you can pull this up on the cmegroup.com, and you can see the next decision, which comes June 14th, right? In about 6 weeks away. You can see that we have a 91.5% of doing nothing. The current target is 500 to 525 basis points. That's the target rate. And we're already at that target right now. Now, a 25 point 25 point basis or 25 basis point hike, it only has an 8.5% of happening. So we know right now that the probability of that happening is very low. So we don't have to wonder what the Fed did. For the most part, they are told what to do by the bond market. you can watch the bond market and the yields and tell what they're going to do. So much, a lot of what you see on TV um, is is just made for getting you to watch it. You got to have something to talk about. But you can click right here and see 8.5%. Now, this number, this percentile can change, right? And it's based upon the movement of the market. And so you can watch the market move and then come back. And, what I'll probably start doing is just looking at this, every video. We'll pull it up and we'll look at it and see how it changes as we get ready for the next meeting. A lot of the times, what is moving the market during that meeting is Federal Reserve Chair Mr. Jerome Powell. What he's saying, he's moving the market with his mouth and trying to get the market to do certain things so that they don't have to do or tighten too much or ease too much. So he tries to move the market with his mouth. I do want to talk about, in relation to the QQQ, let's talk about the IWM. Now, IWM, you may see, you look up here, it says Russell 2000 ETF. So these are like your small to mid cap stocks, but it does have a lot of these regional banks in it. So that's why you see it, for the most part, down. I'm curious to see what happens if the IWM can break out of this range and then go up. Because and that's another reason why I don't think, until this clears up, I don't believe that this banking crisis is over, right? They're telling us it's not a crisis, but we've already had more bank failures during this than we had in 2008 already. The only thing is that our banking system, as it appears, is is very well capitalized. But one thing, see, back then they had banks classified as too big to fail, and then they had passed certain rules and regulations to prevent them from trading too much directionally. But what happened is they they stopped them from being able to trade directionally and certain stocks, but they did not limit their directional trading in the bond market. So they can still go in the bond market and then do trades, and in essence that's what happened with these regional banks. Um, getting long the bond market and far outdated bonds, um, and while the bond market is going down. So you don't they tried to catch a falling knife and the knife just kept falling. And so, and that's basically in in a real easy way, that's what ended up happening. It's a to talk about it, it's a little complicated, you know, buying these bonds that if they were able to hold them to their maturation date, they could make the money on them. But um, people began to withdraw their funds, and so right now those their losses, and over time, if they hold it to its maturation date, they would make the money on the bond. But as of right now, I don't know exactly the maturation date. I don't know if they're 5-year bonds or 10-year bonds. You'd have to be able to look at the book. But I don't need to know the exact. I just know if you're long bonds or you've been long bonds, you're down money. Simple as that. I can look at this chart and tell. So anybody that's been long bonds, unless you're buying it here, just you catching the dips, you lost money over the past few years. And so this is the TLT. This is an ETF of treasury bonds. You do, now if you caught it like down here, you might be good money. Made a little money off of this bounce right here, and it pays a dividend every month. maybe selling some calls in here, selling some calls, and staying afloat while selling calls against an open position and collecting a dividend or keep you afloat in the TLT, right? So those, that's an active trader tactic that can keep you from going to the poorhouse or the soup line, as my cousin would say. So hey guys, let's see. Be on the lookout for another. First of all, hit the like button, hit the subscribe button. I will be doing an update, putting that expected move up there for you guys to look at, and I'll do another little quick video to go over that. Um, so right now, what I like, I like the cues. Now look, anytime you got a market, you got a stock moving up like this, running right into this gap, and it already filled it. So I'm looking for the cues to continue their run up. And obviously, some of the stocks that I looked at, um, now Apple gapped up strong off of its earnings. Now I'm looking at Apple. I'm looking at the relative strength, so it's still got a little bit more room to run. So it can. Um, I'm gonna put a rectangle here to watch this as support to see what happens. But we still got room for Apple to run to the upside. But I don't like owning Apple right here with this move right away. I'd like to get it on a pullback. So I'm gonna stick with messing around with the QQQ, and then I like that. And gold, I do think gold will continue to be, whenever we have some type of volatility in the market, traders will run into gold. You can look at this chart and you can see this is a 3-year chart. We're almost up to 3-year highs in gold. Like another good move and we would be there. So I like gold. I like the Qs. I like, to be honest with you, I do like the bonds. I like the bonds. You can see right here, we almost got, this ain't a triple top, this is a quadruple top. We right up here. Like it hit this line, hit this line, hit this line, hit this line, and we right here. So how many times is this resistance gonna hold for these bonds break? So I like the bonds, I like the Qs, and I like gold. I do think that we are possibly poised for a rally. I normally talk about like shorts and things of that nature. I just can't call it. The chart ain't telling me that. Now geopolitically, it's a lot of risk out there. If you're just looking at what's going on with Russia, China, and the US, Ukraine. Um, when you look at the geopolitical, um, if you're looking at it at the geopolitical picture of what's going on between the nations, it doesn't look good. If you look at what's going on with these banks just failing, right? And the bigger banks that were too big to fail in 2008 are even bigger. So they really too big to fail. So it's almost like the snowball is getting larger and larger and larger, but the stock market is continuing to go up. So I'm a trader who trades, trade what you see, not what you think, right? We can always react if something happens, or even something that the market does not see. And right now the market sees everything. We can tell that the market is seeing everything, because everything is priced in. Even when something should be bad news, it's not even bad news. So trade what you see, be comfortable with your risk, and be comfortable with 100% loss. As long as you can do that, you'll be fine. And with that, guys, I'm gonna be out. Peace.